following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Daryl Martin.
And I got Lou from Fairfield, Connecticut. Man, how you doing, Lou?
I'm doing good, Daryl. And I got to tell you, you're not just blowing hot air out there. I think the way you look at the market is terrific. You're a nice guy as far as over the TV. All the research you do, all the homework you do, I truly appreciate it. I appreciate your view of the market. It's awesome.
I appreciate that. Thank you very much.
Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Daryl Martin.
Hi, everyone. Basil Chapman, sitting for Daryl Martin, the Diagnostic Trading Hour. I usually do the 11 o'clock to 12 o'clock show every day, Monday through Friday. It's called the Tiger Technicians Hour, 877-927-6648, same number to call. And a couple of things going on today. First of all, overnight we had the announcement by the president that we are going in to Iraq, and then lo and behold, the futures plunged 7 points, 8 points, 9 points, 10 points, and 13 points. But comes this morning by the open, everything looks just fine. Everything's good. The Dow's up 67, S&P's up 7.5. The comp index is up 10 at 43.44. You got gold down a little bit, silver's down a little bit. Copper's hanging in there at what is copper right now? Let's see. Last time I looked at it was at just over 3. It's at 3.17, and you've got bonds up 20, 30 seconds. Yeah, we got bonds up again, and the market's up again. Isn't that unusual? So. Let me just quickly tell you about my work. It's my service is the opening call. It comes out every single day. Starting at about 6:30 or so, I start sending charts to the TFNN site under the opening call auspices. And those charts have my Chapman wave methodology notations on them. And what is the Chapman wave? Simply put, you identify the lowest, most obvious low bar, and you merely count each successively higher peak. And when you get to the fourth highest peak, that's where you've got to have a moment of caution, but you can go higher. You can go to an E, F, and even a G, but the fourth highest peak is usually where you want to start doing an assessment, maybe raising your stop on your position or taking half off. That's kind of your objective for the first part of it. Look at this. This is the this is the volatility index. The volatility index trading at 16.50. Down 16 cents. It hit a high of 1709. And what's really important about this is if you take, let me grab this little up arrow. Look, that's the most obvious lowest low bar, and that is right there at 1550 on the 4th. So that's just before the just before the close on the 4th. And what happens is right there, it starts to move up. It goes, let me expand this a little bit so that you can see it easier. And it goes peak A, and then you go 1 penny above that. It starts leg B and goes to leg B, and that becomes a floating letter, which becomes a peak as soon as you make a peak, and with a lower high bar. So that goes A to B, and now if you draw a horizontal line, the next moment is when at 1340 on the 5th of August, when it surpasses 15.88 by 1 penny, starts leg C. And lo and behold, what do we get? We get C goes all the way to there. So it's a floating letter. There's a oops. Let me just check to see something here. Yeah. So what happens is you've got peak C right there. So this is leg C. That is peak C, because the next higher bar is lower than that particular high. That's 16.58. Then you expect a D. Well, a D, this is where you anticipate that there could be a deeper pullback, but it could go momentarily higher. And what does it do? It goes from a D to an E and then an F. When you get an F and you start to come down, you've got to be really careful from that 6th highest peak, because it could be a serious decline in price and time. And lo and behold, it goes from the volatility index goes from 17.30 down to 15.70. 15.70 at 10 minutes past 12 on the 6th of August. And then it rallies again and it goes peak A, peak B, peak C, and this is a little unusual in the Chapman wave, since I have to now use a C1 and a C2. So I won't make it complicated other than to say a peak C1 going to a peak C2, that's like a D that just misses. And look, it did just miss. You had a high of 1642 on the 6th, and then it pulls back. There's a 10-minute chart, and 30 minutes later it tries to get there and it goes to 16.41, 1 penny lower. So that makes a little double top, pulls back sharply, gaps down on the 7th, and what happens? It goes 15.44 is the low, 15.44 is the double bottom there. So this goes peak A, brand new buy signal. So this one was a buy signal. This one is that it goes to a buy signal and then a buy mode, because it goes A, B, C, and you get your D. What did I say? A D. That's the fourth highest peak. That's where you can. Doesn't have to happen, but that's where you got to be careful, because you could get the sharpest decline. Lo and behold, you get the sharpest decline and pulls back like that, and then you get a single leg A up, which starts to fail, and this becomes what I call a rogue wave. The tide did not see the sign at the beach that said high tide at noon, and at 12:06, one tide goes whoosh and pushes right up. And now look what happens. We're starting to get a pullback. Then there's a pattern that I call the lowercase h pattern. Right there. This is from my CD introducing the Chapman wave methodology, available only at TFNN. This is chapter 17, I believe it is. The H pattern, the lowercase h. Look, it comes down, bounces, makes a lower low. Bounces, makes a lower low. Bounces, makes a lower low, but then starts to go sideways. Well, we're going to see what happens here, because you've gone in a very sharp bounce, and lo and behold, you are testing. So there's another little arch formation, but it didn't have the strength of the other. So if it takes out 16.37 on this 10-minute chart, there's going to be a retest of the 16.32 level. Chances are, if that happens, it'll break and will close somewhere on the day, right about 16.20 to 16.10. All right, so that's what I call the naked chart. All I've got here, I didn't even have to have candlestick charts, because I just needed the highs and the lows. That's all. How about we go to the dollar? Let's see what we can do on the 10-minute chart. So there's that H pattern. All right, there's not as much information as I'd like here. Let's go to something like the QQQ series, which has been holding really well. So this is a 10-minute chart. That's the most obvious lowest low bar right there at 9:40 on the 6th of August. So let me just go right there. And we're going to go, look, there's a peak. Let me expand this a little bit so you can see it. Make it as obvious as possible. A, remember we're trying to get to a D. B, and it can go high. It can even go to an F, and that's usually where you got to be real careful. C, D, that's where you can start taking some off. You could raise your stop, and then it suddenly spikes to an E and an F. And then it pulls back. That's the sharpest and longest decline, and that's what you can often expect at a peak F. And then what happens is it pulls back all the way, and it rallies A, B, C, but that C is over that. So that has to be G/C, and then we put a little inverted hat right there. So now let's do something else. I'm going to use a different kind of technology here. I'm going to go to this because Darryl likes to use deviation levels, etc. And I have, this is something that I had developed for me a long time ago. I don't use it all that often, but look what happens. In this case, this is the 10-minute E-minis. And you can see, you see that low there at 1889.30? And it shows it's very strong support level. What was the low? The low was 1890.25. Less than a point above. And then it starts to move up. Shows you 1898.31 is a resistance, and it takes its time trying to break out, and then finally it does. But look at that green line there. that is a positive bias to the upside. And then it turns around. And one of the reasons why I love the Chapman wave methodology is that if you were waiting for this turn to confirm, you would have missed the top. But in the 10-minute chart, let me show you something. In the 10-minute chart, without any technicals at all, that's 120. So we're going to go to the 10-minute right here. So ESU 14. Let's go to the lowest low bar. Well, first of all, there's that H pattern that I always talk about, and a test, and it was an unsuccessful test, except there are times when breaking below the key support is, in fact, very important, but it's even more important if at the same time you get a buy signal that is triggered, which can go to a buy mode. So we go to the lowest, most obvious low bar. We put in the up arrow, and here we go. Peak A. The next peak is there. Peak B. The next peak is right there. Peak C is the 10-minute of the E-minis September contract. And then you go to a D. Lo and behold, it goes to a D. Then there's a pattern that I don't want to talk about right now other than to mention that you could recycle higher. But in fact, because of the speed with which it goes up, there's a good chance that that'll just be an F, an E, to an F, and a G. Not much higher, but allows you to stay in the trade until you stop out, and then a down arrow. And now we've just started what? A brand new A to B. And what's the expectation? D. And let's see if it corresponds to the chart that I was looking at just a moment ago. C, D, the high this time is at 1917.50. Let's go to our automatic, and it says 1960.55 is the strong resistance. So it's stalling here. It's trying to get through. It's stalling. But if it gets through, the next resistance is way up in the 1920 to 21 area. So there's the green line, there's the red line, there's the band, and this is a standard area deviation, and that has 1920 as a target. So that would be the upside target if this rally continues. And one of the reasons why in my opening call this morning, we took all our terrific gains from our short and long VIX index is because there were so many patterns that were unfolding in the Chapman wave methodology. There was a pattern that I call the left side, right side, price time match. Let me just move this. See this green and you see the red? And it said that by August the 7th, there should be, especially based on this diagonal Chapman wave inside bridge target line, a low made right on that day. I'll be right back. Basil Chapman sitting in for Daryl Martin in the Diagnostic Trading Hour. We'll be back. John in Philly.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Daryl takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman, and it is not the Tiger Technicians Hour, which I usually do 11 to noon. It is the Diagnostic Trading Hour, and it's my pleasure to be sitting in for Daryl. And we've got on the line, we've got John in Philly. Hi, John. How are you?
Good afternoon, Basil. Well, you're a trooper taking over the duties of doing Daryl's show this afternoon, so thank you very much.
My pleasure.
Hey, Basil, I have to compliment you on that week of July 21st of seeing the weakness emerging in the Dow and shorting it up there. That's just fabulous work covering shorts down here this morning on the open. So kudos to you on that.
Thank you very much.
I wanted to ask you, Basil, to follow up the observations you've just shared regarding the lows that were made in the cash indices yesterday and the futures 3:30 this morning.
Right.
I wanted to ask, given your assessment of patterns and your Chapman wave techniques, what odds do you give that the lows yesterday afternoon and this morning early were tradable lows? And the second question is, what odds do you give to the scenario of the S&P having bottomed here and staging a rally back to highs?
Okay, those are great questions. So two things. One is I've got the chart now of the daily SPY and the 120-minute SPY. That is the trading vehicle, the SPDR S&P 500 ETF trading vehicle. And if you're looking at this chart on the right, if you're looking at Tiger TV, shows there was a peak D. Remember, we were just talking moments ago about the importance of the fourth highest peak D. Well, there was one at 198.26 back at 11:30 in the 120-minute chart. On the 16th of July, it pulls back under the 9-period moving average, then goes back above the 9 EMA and walks the 9 EMA until it makes a peak D again at the all-time high of 199.06. I would have loved to have seen a round number 200, but that's fine with me. So 199.06, and what does it do? It starts to decline in the 120-minute chart, makes the pattern that I was just talking about, that lowercase h pattern, and right there it breaks under it, and that also turns out to be the 200-period moving average. And under the 200-period moving average from the close on the 30th of July, it gaps down. That was a very ugly session. It gaps down, and that was a peak D, and it gaps down and it goes to a trough E/A, has a little bit of a bounce, makes a lower low and goes trough B, trough C, and this morning, right at 190.55, that's 9 points. That's about, a 9% correction. Is that correct? Yep. And then it goes to 190 point, and this is not intra overnight, but intra-day trading between 9:30 and 4 o'clock. So this morning, the low is 190.95, and it turns out to be a peak, a trough D. Now what's really important, if either today or Monday, wow, we're up 151 right now, up 17 in the S&P. If the S&P, the SPY 120-minute chart is able to close, preferably today, but if it's by Monday, that's fine, any 120-minute bar above 192.94, not only will this be a nice breakout above resistance, but it says that the little gap in the candle that we'd be looking at would be on the 4th of August, and that had a high of 194.30. So that's the near term. It would break down if at any point, let's call it Monday afternoon, I would put it into Tuesday between 11 o'clock and 1 o'clock on Tuesday. If there's any break and the SPY suddenly is trading at 191.50, it'll say, uh-oh, be really careful, because we're now going to have to test the lows. And what has happened in the daily, we've actually had a bear market in the daily chart, and that bear market has pretty much come straight down to a trough C as we're speaking now. That's the low is trough C. But look at the beauty of this left side, right side gap price time match, and that's the gap from the 23rd of May, where the SPY had a high of 190.48, closes almost at that high. Next day it gaps up, and it goes to 190.95. So you've got yourself 1.25 or almost a 1.5 point gap. Well, this morning the low was 190.55, and that previous gap was 190.48. So by 7 cents, it missed filling the gap. But a gap is important, just like a candle, as a focal point. And if you don't mind holding, we'll talk about that, and we'll see where this can go to, where I think it'll fail. We'll be right back with John and Philly. Great, thank you. We're back with John and Philly straight after this break. Dow's up 152.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization deviation capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, everyone. We're back. Basil Chapman sitting in for Daryl Martin, Diagnostic Trading Hour, and we're on with John and Philly. We're looking at the SPY, the S&P 500 ETF, and we're looking at the 120-minute chart, and we're deciding where could this bounce go to? Is it a bounce? Is this a major low? Is this something that is just a tradable a bounce, a more intermediate-term rally? Or is it going to fail and we're going to go to low lows? My opinion is, based on the weekly charts, that there will be low lows to come. But where this goes is going to be very important. And 194.13 was the start of a buy signal to buy mode back at 11:30 on the 26th of June. And that was 194.13, started off a move that went all the way to a peak E at 198.29, pulls back, and that 200-period moving average became very strong support and then resistance. So this is the way I'm looking at it. Because if I draw a horizontal line to the 194.13 right across to where, to next week, what happens is in my analysis of the cup formation, and in my Chapman Wave CD, introducing the Chapman Wave methodology, I have a whole chapter 15, on the cup symmetry. This symmetry, which we just saw inverted in the Dow on the upside in the arch formation, going to an exact August the 7th time and price match. So we're looking at the same thing. If we're looking at the same techniques on the upside, here in this cup formation, it says, and I find that this is a little bit aggressive, so I would have two different points of contact. That 194.13 area, which is about $1, today's high is 192.89. Funny enough, we're only a point and something away, point and a quarter away. But it is a 120-minute chart, and it says if there is follow-through on Monday, and it's really important that today we close somewhere in the above 16, I prefer to see 16,500, maybe 16,490s, but I prefer to see it above 16,500. What would happen then is that there's a diagonal trend line, and that comes in at 4 o'clock at the close on Monday, and it comes in right in that 164 area. It doesn't have to be exact, but that's the kind of time price match that would match. Now, that's answering it in two ways, saying, if such and such happens, we can expect higher prices. And that says if we close well today and on Monday there's further gains, then we can see by Monday or Tuesday that 194 level hit. If, in fact, there's a reversal later in the day because there's a nervousness about the weekend and who knows what can happen, etc., and, in fact, we close towards the 192.13 or lower area, it says, hey, this is just a bounce. Don't get too excited. A lot of short covering. You can imagine how many people were getting short after all the bad news, etc., last night and into early morning. But there's a beautiful support line in that gap that I was talking about from way back in late May. And a gap is almost like identifying a candle. In fact, there is a candle that I had identified earlier, and that was at 191.06 low, and that is the candle of the 28th, a little tiny doji candle, which became a halfway marker for the move up to that peak E. So everything I'm looking at here says that 193.38, the 9-period exponential moving average, which we broke below on the 30th of July, that is going to, normally I would say it's certainly going to be a repellent line or a repellent zone. That's number one. But in this particular instance, we haven't yet broken above the candle of the down candle from yesterday. Let's see, that's 8.8, so this is right there. So 193.13. So you can see a lot of the weight of evidence right now says that the stochastic at 13% is trying to make a nice V-shaped recovery to complement the 120-minute chart. There's a flattening out, but a very wide distance in the 9-period differential between the faster moving average, that red, the green line, and the moving average, the red line in the MACD, the moving average convergence divergence. It is flattening out, but it's way, it hasn't even closely started to turn positive. It will take a lot of rallying to do that. So I have to consider this as a retracement failure mode. It's an explanation. It doesn't say it has to fail. It just says that it's sharply under the previous high of 199.06, and that to show a concerted upside activity, I haven't got a leg A in the daily yet. I will not get it until it goes above 193.13. Doesn't have to close above, just has to go to 193.14 to start leg A. And the moment that happens, then I can start saying, okay, now this is what I need to see. The stochastic go above 20%. Right now, it's only at what we would normally call a buy signal, which could fail. You want to see a buy mode in the daily, which says the stochastic has to go above 20%. There has to be a sharp move up with price, preferably peak a leg A. Usually, you'd even see a leg B before you get any confirmation. And then the final tip-off is that the MACD has to cross positive. How it can cross positive at this point without time and an extended move in the price, it just doesn't happen. So there's this MACD which is saying this has to be treated first as just short covering plus initial buying, but until it sustains and goes into the 193.40 0.40 plus area, the SPY has to be this has to be considered suspect. Even if you were to put on longs, you still have to say, I don't have the evidence. The weight of evidence is not there yet. And normally what would happen is you'd go from the shorter time frame, in this case the 120-minute chart, to the daily, and when the daily really succeeds, it starts to get that weekly to kick in. So now to answer your question, there's a very easy thing that I could do. Normally what I do is I take the high and low of the candle that's just formed in the weekly chart, especially if it's what I call a long-legged doji. And at this point, the week started off at 191.46. And we're at 192.82. We're real close with a little candle inside. I would grab that and I would draw a rectangle. And I would say, okay, in this kind of pattern, this is a weekly chart. If next week there is a close above this week's high of 194.30, it says that's very good action. And you could even anticipate a partial week of rallying above whatever the high is next week. And then you got to be really careful. If there's a close below 190.55, that's the low that we made so far this week, it says be careful, because you could start to move down, and that would say that you could, if there's a close below 190.55 in the weekly, all of next week, that's at Friday, exactly a week from now, that would suggest that the following week you'll have another low, but that week you could start to see a bit of a rally. And then what's really fascinating about this particular candle is that the body of 192.82, or wherever we close at 4 o'clock today, even if you go up, there should be a period where you test the body of this candle. And even if you go down, there should be at least one sudden spike to test the body of this 192.80s area. So let me sum it up. The candle that was formed this week is being formed this week is suggesting that we could draw a rectangle formation, and that there will be some trading within the boundaries of this. And if there's a move up on Monday, and it goes above the high, if we haven't done it today, above the high of yesterday, which is 193.13, that's going to be positive, and you should go even higher. But the boundaries at this particular point are 194.30 with a little bit of an extension. I'd say 195.30 would be the upside limit that I'd be looking at least for now. And at this point, there should be tremendous support at that body of the candle of 192.80. So I know maybe I made it a little too complicated, but that's what I'm looking at. Now, if you don't mind, I just want to show the volatility index, because everything is contingent upon the volatility index not holding well, but starting to decline, which I believe it will. I spoke about that in my show this morning, that there were 3 lower highs, and I'd be anticipating that the volatility index, the VIX, which is at 15.57, down 1.09. One of the reasons why we took all our gains in the long volatility index and the short inverse volatility index was because I'm anticipating that over the next day or two, there really is a test of the mid-14s. It could even get to 1420, maybe even the 200-period moving average of 1359. If that VIX refuses to go lower than the candle of the 4th, which is 1469, that's saying be really careful, because selling pressure is still sitting there strongly within the volatility index. And now I'm going to add one other thing, if you don't mind, John. The weekly chart is making a peak B in the VIX index. Every other peak B, well, not every, but the last 2 have been failure patterns. So
look at that, as I'm looking in the Tigers Den and all those peak B tops in the VIX. Unbelievable.
Right. And now, one thing that I'm going to do is I just want to show you something here. Look, if I go from there to there, and then I do a new parallel, and I put it here to here, this is the first time. You see the symmetry of all these U-shaped patterns?
Yes, indeed.
And then it starts to get longer, and now longer again in the weekly chart. My suspicion is that this is actually going to become a little bit of a halfway marker and that we were going to get another U-shaped pattern, and the VIX at some point within the next, I'd say 2 weeks in August, should spike, and it should spike above 18. And if it spikes above 18, there's a real good chance it's going to get to the 21s. So that's just from the pattern that I'm looking at. But I have to now be very patient and say, watch the volatility index. If it hangs out over here, we're in for another negative surprise sooner rather than later. But if the volatility index actually starts to decline, because the stochastic and MACD are very strong, but if they start to decline and that VIX goes by Monday morning at 11 o'clock, if the VIX is down to the 1490 to 1470 area, that's saying, uh-oh, don't be short right now. This is a very good move. Now, the other thing, if you don't mind, I'm going to use this time just to talk. These are not S&P stocks. Well, they are in the S&P, but these are Dow stocks. My Dow Quartet, GE, which for the first time is actually starting to act quite well. IBM, it was acting terribly and foresaw the move down. And one of the reasons why I wanted to cover today is I noticed that GE was starting to make higher highs and higher lows. And I thought, it's been a good tip-off for all the turns in the market on the shorter term. So IBM is trying to bounce here, but it doesn't look very good in the 3 different time frames, but it is at least attempting a bounce. Triple M, one of my Dow Quartet index stocks, is acting very nicely, coming off a bottom with a little V-shape in the on-balance volume, and the 120-minute chart has given, this is leg C, it's not a great-looking chart, but it is coming off a bottom. And UTX, my pilot light for the intermediate term, is making a very nice leg A right here. So I think this has legs, and I think it could go into next week with just a chance. I don't know if it can, but with just a chance that it goes into a week from Monday or Tuesday. But we'll have to see. I don't want to get too carried away. Meantime, back at the ranch, the answer to your question is, yes, this is this should be a pretty darn good bounce. It should go further. The SPY, the question was the SPY, I don't think it's a major buy signal at all. I think this rectangle formation is going to prove to be quite prescient, and I suspect that I could draw in here an H pattern. Let me just do it just above the high that was made this week, and that this is the pattern that we're looking at. An H pattern in the SPY weekly chart, and the monthly chart has made a peak D, which will turn out to be a little bit more significant if the SPY at any point breaks under 187.74, the 9-period moving average in the monthly. And I have some signals here that are saying, be careful, this in fact could be a more severe in time and price pullback. Whoa.
Yes, I appreciate that thorough review. I wanted to just pass along a thought of mine to you on the S&P, specifically the SPY or the S&P cash.
Yes.
Of course, the S&P cash fell from 1991 down to 1905, 1904 yesterday. So a decline of, what does that make it, 86 points. The E-mini futures had a decline of 10 points greater because of that overnight selling event, and then retrace. A couple of things occurred to me. One, the rally looking over the intermediate term, the past 6 months, past year, has been so incredibly powerful that I want to give respect myself to the underlying power there. And, of course, that shows up very well in your monthly chart. Now, as far as where the S&P pulled back to and held, on that breakaway gap that you referred to, Friday, May...
Yep. Whoops, we've got a break coming up. John, hold on. We'll be right back.
Thank you.
take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Yeah, stay tuned for Dave White coming up. Power, what Dave uses, he's our technical guru here, and he has done fabulous work with the Power Vector Indicator, and I just think that it's really worth listening to. So stay tuned, and we are on with the Basil and John in Fully show right now, and we're looking at a Dow up 150, S&P's up 17. So John, I want you to continue your thought in this little segment that we've got left, but I want you to just quickly mention that in the indicators that I have, 190.85 is showing here as daily support, and in the 120-minute chart, you've got a whole bunch at 190.37, 190.09, and the low so far is 190.95, and then at 194.79 to 194.59 is a lot of resistance in the 120-minute chart. If it breaks above that, you can go all the way to 196. That's the way it's looking right now. Yes, so you were saying.
Yes, very good. That's also helpful, Basil. The upshot is that breakaway gap I view as significant back May 23rd to Tuesday, May 27th, that Memorial Day weekend. The cash market, at least according to one data source that I have, went right into that at the 1904.8 low yesterday on the cash.
Yes.
Furthermore, I wanted to share with you, in my work, the March 4th swing high in the S&P, that was the top that was made after that big rally off the February 5th low.
At 198.96, yes.
And there was a big rally and a peak, just a short-term trading peak, March 4th. That comes in around 1883. So I see this nest. It's essentially a 1% window. That gap kind of around 1905 to 1900, and then that swing high at 1883. So long, we've come down, we've gotten into that range, we've bounced here. I frankly can't get my mind wrapped around a scenario where we immediately surge higher, but so long as we've come down to that nest of support and held it, I myself am loath to get too bearish and thinking it's an immediate short sale. So here's my question to you and what have you.
Yeah, I agree with you on that. And if you look at the IBB, which has been one of the bellwethers in the NASDAQ, most of them in the NASDAQ, not all of them, but this is the NASDAQ biotechnology sector. It's rallying here, but it's really struggling. And if you look at the SMHs, I think that's the other clue. The SMHs struggling. You wouldn't expect that. You'd expect them to be participating right now. So this is a very select moment. It's a select moment to have some of the stocks that have been really beaten down bounce. And at the same time, two things are going on. The rotation, even within a sector, you can see, for instance, we went long a particular stock this morning, and it pulled back. It shouldn't have pulled back as sharply as it did. It pulled back 5%. We were very lucky. We got out with at about not even 2% loss, I believe. But at the same time, that is very unusual. This is a stock that had been doing well and should have continued doing well. This is a very select move, and that's the reason why I say that those are the levels that I'd be watching. So, John, I hope that helps you, but the most important thing, I'm going to make it as easy as possible, the volatility index, the VIX, has been our benchmark all the way through for years now, and right now is still holding at 15.87. If it cannot get into the 1520s, then that's going to be support for the VIX, and that'll make the selling in the SPY come right back in next week. Thanks for being here, John. Thanks, everyone. I'll be back on Monday. Check out my opening call in Tiger Technicians Hour at 11 o'clock. See you. Have a great weekend.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.